Joining us right now is Wells Fargo Senior Global Equity Strategist Scott Wren. And Scott, we're waiting on Apple to report, and Facebook comes after the close tonight. What's your take on how this reaction is going to earnings, and we're seeing all of this volatility?
Well, Maria, clearly for the third quarter, which, remember, that is history, the third quarter earnings have been really, really good. As a matter of fact, they're right up against the second quarter earnings, which were almost 25%. So I don't think you can complain really about the revenue number either, which is close to 9%. You know, for us and what we've been talking to clients about is, okay, we know earnings are going to be great this year, north of 20% for the year. What are they going to be in 2019? And really, there's a lot of things that go into that. But part of it is the Fed going to make a mistake and raise rates too much? Is global growth going to slow? What's the implications for margins in terms of average hourly earnings, wages going up, which we're probably going to see a number north of 3% on this week's
Scott,
employment report?
What's the answer? Is the economy going to slow?
Well, for us, you're going to see a lower GDP number. We're at 2.9% this year in the U.S. We'll probably be a tenth or two lower than that next year. But, you know, if you grow 2.5%, 3% and inflation is modest, I mean, that's a good environment for stocks. So I don't think there's any reason to panic. But this global growth situation, we're looking for modest global growth. But clearly there's some fears. Some of it's tariff related. Others is just that, you know, the Eurozone, you know, you're just not seeing much going on there in terms of GDP or productivity or anything like that. So I think global growth will be okay, but certainly the market's worried about it.
Hey, Scott, it's Mike Murphy. You know, I think when you see this type of volatility coming into the market, people start to panic and people start to make some really bad decisions. I think looking out to 2019, as you point out, tough to say what exactly earnings, where they're going to come in. But looking at a company like Amazon, for instance, Amazon was 2,050 a few weeks ago. This morning, it's in the 1,500 range. So regardless of what happens next year, the stock is trading at a lower valuation today than where it was a few weeks ago. And I think for people looking to invest money, it's a great entry point after you see this type of pullback. Thoughts there?
Well, I tell you, Mike, we have been talking to our clients about this. You know, retail clients have been underinvested in stocks for most of this recovery. And so we've been talking to them about taking advantage of this. And the thing is, and this is an age-old problem, people have cash sitting on the sidelines. They want to get invested. You talk to them about taking advantage of pullbacks. But when the pullback happens, especially when it's this quick and steep and almost seems like a panic, then they back off and they say, oh, my God, you know, I don't want to step in here, even though they do have money that they want to invest. So that's an age-old problem. We want our clients to take advantage here. We don't think this expansion or the bull market is over. So, you know, these are perfect opportunities to step in here and buy things like industrials, consumer discretionary, financials, things that will benefit from a continuation of the expansion.
Scott, hey, it's Pete Hegseth. Do you have any concerns about the political climate going into 2019, gridlock in Washington? Does that affect your outlook at all?
You know, Pete, I think that, you know, normally gridlock is good for the market. I think we've made some good progress in terms of regulation, taken away some headwinds for businesses, obviously lowered taxes a lot. So those things are in place. And I don't think, let's say the Democrats take the House. I don't think they're going to take the Senate, or we don't think they're going to take the Senate. I don't think there'll be a veto-proof majority. So I think there's some things in place that have been good. I think they're going to stay in place. They'll be tough to take away. So I think we'll trade off these midterm results for 3 weeks, 4 weeks, maybe 6 weeks. But then the market's quickly going to get back to what's the economic outlook like over the next 12 months. What's the Fed going to do? What's the global economy going to do?
What's Wall Street's opinion of this fight with China? How important is it? Are people just giving the president the benefit of the doubt that this is going to end and he's going to get a deal or not?
Well, in our opinion, there's a relatively low chance of an all-out trade war. And really, Maria, for us, you know, 50–60% tariffs across all products, that's a trade war. We're not there yet. Clearly, we saw some good results with Canada and Mexico. And in our opinion, over time, you're going to see some good things happen with the EU and eventually with China. But really, this G7 meeting, the market is really going to be watching that, because if Xi and Trump actually do meet, which there were some headlines that were, maybe they will, maybe they won't,
right.
Maybe it won't be a big deal, those kinds of things. But I'm telling you, if there is even a whiff of something positive coming out of that, the market is going to like that. And I think there's a lesser extent, but you always have to hope. If the Fed backs off and talks and starts talking a little more dovish, a combination, either or of those things, or a combination of the two, and I think we're going to be right back in our 2,800 to 2,900 year-end target range that we've had for the S&P 500.
That sounds about right in terms of the sentiment throughout the street, that people are giving him the benefit of the doubt, waiting for some solution, but expecting that he is going to do something positive here. Look, he spoke with Laura Ingraham on Fox last night, the president, and he talked about the markets and what he thinks is the real problem. Listen to this.
One thing that I think a lot of us are very concerned about is what's happening with the market this year. It's flat for the year, down a little bit, off its record high, both the S&P and the Dow. I know you've complained about the Fed before. How much is cheap credit globally as a part of this problem?
Well, remember this. President Obama had the worst recap that we've ever had since the Great Depression, okay, in terms of coming back. But he was dealing with zero money, zero interest money. We actually created value for money. So the people that have money in the bank and did it the way you're supposed to do it, they're actually getting interest on their money now. The Fed is being very tight. Now, in one way, you have to say that's very conservative. That's a good thing from the standpoint of conservative. I don't like it because it closes it down a little bit. But we were up almost 50% from the time I got elected.
So you think the Fed raises rates in December, or all of these worries about growth, Scott, is that going to push the Fed's hand to say, you know what, let's wait and assess? Or do they feel under pressure to continue their plan to raise rates in the face of the president criticizing them?
Well, Maria, our fixed income team makes that call, and they are looking for the Fed to raise rates in December. And over the course of the next 12 months or so, they're expecting 3 or 4 hikes there. But, I wrote a piece this week for commentary that I do every week, and the title of it is Standing on the Red Line. In other words, what we're thinking is that, if the Fed raises rates 4 times, as they've hinted, between now and the end of 2019. I mean, they are at that red line. And if they start to talk more hawkishly than that, I mean, the market is not going to like that. And I mean, that's a concern. Right now, that's probably not at the top of the pile, but believe me, it's a second or third concern. So I think it's very important, certainly if the Fed started talking more dovishly, and they could raise in December and talk a little more dovishly about next year. I think the market would like that.
All right. It sounds like you're overall bullish and looking toward the long term. Scott, it's good to see you.
Maria, we're not wildly bullish, but we certainly think this expansion has more to go.
All right, Scott. Good to see you this morning. Thanks very much. Scott Wren is from Wells Fargo this morning.